Problem 1-46. We're going to record transactions and then use the results to prepare the financial statements. This is a great problem for showing the whole accounting process. Now, most homework won't have this many instructions, so just bear with me. Angela Petrillo recently opened her own law office, which she operates as a sole proprietorship. The name of the new entity is Angela Petrillo Attorney. She experienced the following events during the organizing phase of the new business and its first month of operation. Now, this part is very important. Some of the events were personal and did not affect the law practice. Others were business transactions and should be accounted for by the business. So remember, in a business's accounting records, we only record the transactions that affect the business. We do not include personal transactions when recording the business's transactions. So we're going to analyze the events chronologically, one transaction at a time. Then, beginning after the transaction on the second, we're going to calculate the balance of each account after analyzing the effect of the transactions on the accounting equation. After calculating the ending balance of each account on the 31st, we're going to calculate total assets and total liabilities and equity to make sure that our accounting equation balances. Now, this is where my accounting lab gets a little bit picky. We're supposed to complete only the necessary answer boxes for our transaction lines. Anything with a date on the left of the row is a transaction row. Anything with BAL, period, is the balance row. If a box is not used in a transaction row, leave the box empty. Do not enter a 0 for the transaction lines. If a transaction is personal and does not affect the business, leave the transaction line blank. We're going to carry down all balances to the BAL, the balance line, and we're going to include zero balance accounts, entering a 0 for any zero balances. So to summarize, do not enter zeros on the transaction lines, but do enter zeros on the balance rows if an account has a 0 balance. Enter a decrease in an account with a minus sign or parentheses. I always use a minus sign as there are less keystrokes for a minus sign when compared to using parentheses. Now let's talk about abbreviations. AP is accounts payable. AR is accounts receivable. CAP is capital, so that's the capital account of the owner, Petrillo. COMP stands for computer. EXP stands for expense. LIAB stands for liabilities. MISC stands for miscellaneous. REV is revenue. SUP is supplies. UTIL is utilities. And withdraw is the owner's withdrawals account, also known as draws. Okay, finally, we can start the first transaction. To see the transactions, we click here. March 1st. Sold personal investment in Amazon stock, which she had owned for several years, receiving $31,000 cash. Now notice this is her personal investment. This has nothing to do with the business. We cannot include personal transactions in these business records, so we record nothing on March 1st. And since the rules state that we do not enter a 0 for the transaction lines, we won't enter anything on this transaction line. Now the second transaction, March 2nd, deposited the $31,000 from the sale of the Amazon stock in her personal bank account. Again, this is her personal account, so we record nothing in these business records. It's important to keep your personal transactions out of your business transactions. Next, we bring down the totals, but the instructions say we do enter zeros for the total row. No transaction has affected the business yet, so all the balances are 0. Before I move on, I need to check the answer. Now we are on March 3rd. Deposited $72,000 cash in a new business bank account titled Angela Petrillo, attorney. The business gave capital to Petrillo. So finally, we have a transaction that affects the business accounting records. So we need to record this in the business's accounting records. Let's start with cash. The business's checking account, also called the cash account, is increased by $72,000. So we need to put a positive $72,000 under cash. Now the comma is optional. You do not have to put the comma in there. Before we talk about the other account, do we recognize what type of transaction this is? It's an owner contribution or owner investment. And using our cheat sheet that shows the 4 things that affect equity, how do owner contributions affect equity? They increase equity. Remember, equity is simply the portion of the assets that the owner owns. So when the owner contributed or invested cash in her business, who owns that cash? Does the owner own the cash, or do others, such as the bank, own the cash? So basically, they're asking, is that increase of cash going to increase our liabilities, or is it going to increase our equity? Obviously, the bank does not own the cash. The owner owns the cash. So Angela's equity increases. And the equity account that is affected is capital. An owner contribution of cash is definitely not a withdrawal. It's not a revenue. Remember, revenue occurs when we sell something, and it's not an expense. The only equity account left to be affected is the capital account. So remember, owner contributions always increase the capital account. Also notice that the transaction description states that the business gave capital to Petrillo. So since capital is increasing, we put it in as a positive $72,000 under capital. So remember, for the transaction line, we do not enter zeros for accounts that are not affected. Now, before we move on, we should double check that the 2 accounts have an equal effect on each side of the accounting equation. We have a positive $72,000 on the left side of the equal sign and positive $72,000 on the right side of the equal sign. So the equation balances. In other words, $72,000 does equal $72,000. Next, we bring down the totals. So cash, we have a total of $72,000. And remember, the instructions say we do enter zeros for the total row for accounts that have no balance. In the next chapter, we'll learn a better method of accounting where we don't have to remember these do I enter zeros or not rules. But we have to work our way up to learning the more efficient accounting method in the next chapter. We should also double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. Obviously, 72,000 equals 72,000. Now we can check our answer. March 5th. Paid $350 for ink cartridges for the printer. Now the word paid means that Angela's business did the paying. So her checking account, also called a cash account, decreases by $350. And what did she buy? Ink cartridges for her printer. Now, will these ink cartridges be used up right away? No. If they were used up right away, they would be an expense. But these ink cartridges will have a future value, which means they are not used up right away. So they have to be an asset because assets have a future value and are not used up. Which asset account should they be listed under? Office supply. So office supplies increases by $350. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation. We have positive 350 minus 350 on the left side, which is a 0, and we have 0 on the right side, so the equation balances. Now we bring down the totals, but remember the instructions say we do enter zeros for the total row. Then we check our answer. Oh, before we check our answer, we should double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. March 7th. Purchase computer for the law office, agreeing to pay the account $5,500 within 3 months. So now the business has a computer. Will the computer be used up right away? No. If it was used up right away, it would be an expense. The computer has a future value, so it has to be an asset. So we're going to increase the computer account by $5,500. That's one expensive computer. So did she pay cash for it? No. She's promising to pay later, so that's a liability. So we increase the liability account, in this case called accounts payable, by $5,500. The business now has $5,500 of debt. We should also check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And $5,500 equals $5,500. So that balances. Next, we bring down the account totals. And before we check answer, we need to double check that the left side equals the right side for the balances. And they do. March 9th, received $2,500 cash from customers for services rendered. Cash, the business checking account, is increasing, so we put positive $2,500 under cash. Why did we receive cash from customers? For services rendered. This means we performed a service. Anytime we perform a service, we need to record revenue. So under service revenue, we put positive $2,500 because our revenue is increasing. And notice I did not put zeros in the unaffected accounts on the transaction row. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation. We have positive $2,500 on the left side and $2,500 on the right side of the equal sign, so the equations balance. Next, we bring down the totals But of course, instructions say we do not enter zeros. Excuse me, we do enter zeros on the total row. So for cash, I'm going to take $71,650, add $2,500. That gives us $74,150. We have 0 AR, $350 of office supplies, $5,500 of computers, $5,500 of accounts payable, $72,000 of capital, 0 withdrawals, $2,500 service revenue, 0 utilities expense, and 0 miscellaneous expense. Must be nice to have a company that has, so far, no expenses. So before we check answer, we should double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. March 15th. Received bill from the lawyer for a magazine subscription, $340. And we're supposed to use a miscellaneous expense account. Now notice the description says we received the bill. It does not say we paid the bill. Since we are not paying it yet, we owe that amount. So that's now our debt, also known as liability. So we're going to increase accounts payable, AP, since we have more debt. To see what the account tiles are, here's AP. So I'm going to put positive $340 because we have more debt. And the description says we need to record the $340 under miscellaneous expense. So we're going to put $340 under miscellaneous expense. And notice I did not put zeros in the unaffected accounts on this transaction row. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation. On the left side, we have 0. So this means we'll need to have a net amount of 0 on the right side. So on the right side, we have positive $340 under accounts payable. And then we're going to subtract $340 under miscellaneous expense. So notice all expenses have a negative sign because they decrease equity. So that means we take the positive $340 under AP and then subtract $340 under miscellaneous expense, and we get a net 0 on the right side of the equal sign. So the equation balances. 0 on the left side, 0 net amount on the right side. Now we bring down the totals, and remember the instructions say we do enter zeros on the total row. So we've got $74,150 of cash, 0 AR, $350 of office supplies, $5,500 of computers. We now have $58.40 of a debt, $72,000 capital, 0 withdrawals, $2,500 of service revenue, 0, and $340 of miscellaneous expense. We should also double check now that on the total row, the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. March 23rd, finished court hearings on behalf of a client and submitted a bill for legal services, $18,000, on account. Now, notice it says we submitted a bill. It does not say that the client has paid us yet. We also know the account did not pay us yet because it says on account. If we sell something on account, this means the client is promising to pay us later. Since the client has not paid us yet, the client owes us $18,000. The account that shows that the client owes us money is AR, accounts receivable. Scrolling up to see our headings, AR is this column. So I'll put positive $18,000 in AR. And the reason I put positive 18,000 is because we have more accounts receivable, not less. And why did we bill the client for these services? Because we performed a service. Anytime we perform a service, we have to record revenue. And the revenue column is this column. Therefore, under service revenue, we put positive $18,000. And notice that all revenue transactions have a plus in front of them because revenue increases equity. And notice I did not put zeros in the unaffected accounts on the transaction row. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation to make sure we didn't make any mistakes. We have positive 18,000 on the left side of the accounting equation, and we have positive 18,000 on the right side of the accounting equation. Therefore, the equation balances. Now we bring down the totals. We should also double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. So now we can check our answer. March 28th, paid bill from the lawyer. So notice that back on the 15th, we received a bill from the magazine called The Lawyer. We did not pay it back then, so we increased accounts payable to show that we owed that amount. Now we are paying that bill. Cash is decreasing since we paid it, so I'll put minus $340 under cash. And now that we are paying off that debt, I will lower accounts payable by putting minus $340 under accounts payable. This is because our debt is decreasing. And notice I did not put any zeros in the unaffected accounts on the transaction row. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation. We have minus 340 on the left side of the equation, and we have minus 340 on the right side of the equation. Therefore, the equation balances. Now we can bring down the totals. We should also double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity, and they are equal. March 30th, paid utilities, $1,300. Another way to explain this transaction is we get a utility bill and we pay it right away. Since we are paying it right away, there is no need to list it under accounts payable. So cash is decreasing by $1,300 since we paid it. So I'll put minus $1,300 under cash. And what are we paying for? Utilities. So what would the other account be? Remember the definition of an expense. This is definitely a utility expense, so I'll put $1,300 under utilities expense. And notice I did not put zeros in the unaffected accounts on the transaction row. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation. We have minus 1,300 on the left side of the equal sign, and we have minus 1,300 on the right side. So don't forget that all expenses have a negative sign in front of them. Therefore, the equation balances. Next, we bring down the totals, but the instructions say we do enter zeros on the total row if an account has zero or a balance. So cash looks like we've got 72,510, 18,000 of accounts receivable, 350 of office supplies, $5,500 of computers. We've got accounts payable of $5,500. Got capital of $72,000. We've got zero withdrawals. Service revenue of $20,500, $1,300 of utilities expense, and $340 of miscellaneous expense. So we should also double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. March 31st, received $1,800 cash from clients billed on March 23rd. So back on March 23rd, we sent a client a bill for $18,000. We increased accounts receivable, AR, to show that they owed us that much. Now they are paying part of that, not all of it. So we need to lower accounts receivable by $1,800, which is the amount they paid. And we need to increase our cash by $1,800. And notice I did not put any zeros in the unaffected accounts on the transaction row. Now, before we move on, we should double check that the two accounts have an equal effect on each side of the accounting equation. On the left side, we have a net zero, $1,800 cash minus $1,800 AR. That gives us zero. And we have zero on the right side of the equal sign. Therefore, the equation balances. Next, we bring down the totals, but of course, we do put in a zero for any account with a zero balance. So cash looks like we have $74,310. For AR, we now only have $16,200. I get that by taking the $18,000 and subtracting $1,800. $350 of office supplies, $5,500 of computers, $5,500 of accounts payable, $72,000 of capital, zero withdrawals, $20,500 of revenue, $1,300 of utilities expense, $340 of miscellaneous expense. So of course we should double check that our left side of our accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. And now for our last transaction, which was also on March 31st. Petrillo withdrew cash of $2,000 because the term withdrew is being used, that means she's taking the cash out of the business to spend on herself. It could be groceries, it could be her personal phone bill, etc. We don't care since we are only recording business transactions. But since she took money out of the business, we need to lower cash by $2,000. Now we need to find the withdrawal column. So here's the withdrawal column. And since it was a withdrawal, we put $2,000 under withdrawals. So notice all the withdrawals have a minus in front of it. So we have negative 2,000 on the left side of the equation, and we have negative 2,000 on the right side of the equation. So the transaction balances. Next, we bring down the totals. So we're going to have $72,310 of cash, $16,200 of accounts receivable, $350 of office supplies, $5,500 of computers, $5,500 of debt, $72,000 of capital, $2,000 of withdrawals, $20,500 revenue, $1,300 of utilities expense, and $340 of miscellaneous expense. So we should double check that the left side of the accounting equation, assets, equals the right side, liabilities plus equity. And they are equal. Now My Accounting Lab is formally requiring us to make sure that our left side of the equation, our assets, these numbers, equal these numbers. So if we add 72,310 plus 16,200 plus 350 plus $5,500, that gives us 94,360. So when we add these numbers up, we should get the same amount. So 5,500 plus 72,000 minus 2,000 plus 20,500 minus 1,300 minus 340 also gives us 94,360. So our assets do indeed equal our liabilities plus owner's equity. Our next task is to create the three financial statements: the income statement, the statement of owner's equity, and the balance sheet. First, let's look at our cheat sheet with the formulas for each of the three statements, and we'll see what each statement is trying to communicate. First, we have the income statement. Its job is simply to show if the company made a profit, also called net income. The formula is revenue minus expense equals our net income, or net loss if expenses are greater than revenue. Next, we have the statement of owner's equity. Remember, the capital account is the main equity account for a sole proprietor. So this statement could also be called the statement of capital. So the formula starts with the beginning balance of capital. Beginning means the beginning of the year or whatever time period we're looking at. Then we show how the capital is affected by the four things that affect it: investments, net income, and draws. So remember, the four things that affect equity are revenues and expenses. When you combine those, you have net income or net loss. Owner contributions and withdrawals. And owner contributions increase equity, withdrawals decrease equity, revenues increase equity, expenses decrease equity. So we're going to start off with investments. And because investments, also known as owner contributions, because they increase equity, we're going to add that to our equity account, the capital account. Next, we're going to take the combined revenue minus expense, which is net income, and we're going to add that to capital. Now, if this is a net loss, we would have to subtract it from capital. And then we're going to subtract our draws because they lower equity. We do the math, and that gives us the capital at the end of the period. Now, some students like to remember acronyms to help them remember formulas. So some like to remember this as BIND with an E, B-I-N-D-E. Then last comes the balance sheet. Its formula is simply the accounting equation. Assets equals liabilities plus owner's equity, also called capital. But which owner's equity do we use? Do we use the capital at the beginning of the period or the capital at the end of the period? We use the capital at the end of the period. So the balance sheet shows how much assets a company owns, how much debt the company has, also called liabilities, and how much of those assets are owned by the owner, also called capital or equity. So the first statement we are creating is the income statement. And notice the rules are, if a box is not used in the table, leave the box empty. Do not select a label or enter a 0. In other words, just because there's a box there doesn't mean you have to fill it with something. So our first task is to fill in the 3-line heading. So the top line of the 3-line heading is always the name of the company, Angela Petrillo, attorney. The second line is the name of whatever it is that you're working on, in this case, the income statement. And the third line is the time period. For an income statement, it's a period of time, not a single day. What was the period of time that we recorded the transactions? If we forgot, let's just scroll back up. So we recorded the transactions for the month of March. So we're going to use month ended March 31st. Now we need to know what the income statement is showing. It shows whether the company had a profit, also called net income, or a loss, also called a net loss. Do you remember what the formula is for the income statement? It's revenue minus expenses equal net income. So we're going to list our revenues first. Now, most companies in the real world have multiple sources of revenue, but this company has only one source. So let's go back up, find out which of these columns is our revenue. Here's our revenue. So service revenue. So we're looking for this column, and we have to use our last balance. So I'm going to double click this, copy and paste. So we got $20,500. The main label is revenue. Then we list what type of revenue it is. It is service revenue. And that was our only revenue. So now, according to our formula, remember, we're now going to subtract all of our expenses. So we use the main label expenses, and we're going to list our expenses. So scroll back up here, find our expenses. Expenses fall under the equity classification. We've got 2 expenses, utilities and miscellaneous. So let's see what the final numbers were. We've got $1,300 of utilities expense. Scroll back up, and we've got $340 of miscellaneous expense. Now, My Accounting Lab does not make you put the expenses in a certain order. In the real world, they often put the largest expense first. So that's why I did it this way. And we've only got 2 expenses, so we leave this third line blank. And now we're going to total up our total expenses. So we've got $1,000,640 of expenses. $1,300 plus $340, $1,640. Now, to get our net income, we're going to subtract our revenues. We're going to take our revenues and then subtract our expenses. So we've got $20,500 of revenue, subtract $1,640 of expenses, gives us $18,860 of net income, also known as profit. So finally, we found out that this company is profitable. So all this work One of the reasons we do all this work of keeping track of all the transactions is we have to know if we made a profit or a loss. And then the company's going to have to pay taxes on the profit, of course. Now we're going to create our statement of owner's equity. So before we start the statement of owner's equity, we need to do the 3-line heading. The 3-line heading is, again, the first line is the name of the company. Second line is the name of whatever it is you're working on, in this case, statement of owner's equity. And then the third line is time related. So we have to figure out, does this statement of owner's equity show what happened to equity over one day or a period of time? Well, if you look at this, we've already got the dates in there. It's going to show us what happened to capital from March 1st to March 31st. So it's a period of time, and that period of time happens to be for the whole month. So we're going to say month ended. Now, let's get back to our formula. So the formula says we need to start with beginning capital. So that means the beginning of the time period. So we're going to scroll up here and find our capital account at the beginning of the month. So the beginning of the month, this is 3/1. So at this time, we had 0 capital. And that makes sense because that's when she started her business. And your business, when you start your business, everything starts with a 0 balance. Next, we need our investments. So investments go, also called owner contributions, they go in which account? They go in the capital account. So let's look for increases in the capital account. We got increase of 72,000 here, and the rest of these 72,000s are the balance. So we've got only one contribution, 72,000. And that's when she put cash into her business. Owner contribution, also known as an investment. And then getting back to our formula, we're going to then add net income. So where do we find net income? Well, right here. Remember, we just did the income statement. So here's our income statement. So we're going to take this net income. I'm going to copy that and paste it here to add that. Okay, and now this is a subtotal column. So we're going to add these two up. Looks like we're going to get 90,860 for the subtotal. And then the last thing we're going to add or subtract is the draws. So we're going to subtract our draws. So these are withdrawals, also known as draws, owner withdrawal, and scroll back up to find out the company's withdrawals. So the withdrawal account is right here. Scroll down. So it looks like we had a total of $2,000 of withdrawals. And because that's a negative number, we always subtract withdrawals. We're going to put a minus 2,000. Now we're going to take our subtotal, 90,860, subtract 2,000, that gives us 88,860. So it looks like the owner capital went up from 0 and ended at 88,860. Why did it go up so much? Well, the main reason it went up is a huge owner contribution. Profit also made it go up, but not quite as much. If you're looking at a company to invest in, the main reason you want the company's capital or equity to go up would be from profit. Because an owner can only contribute so much. Now we're going to create the last financial statement, the balance sheet. So remember, the balance sheet is based on the accounting equation. Assets equals liabilities plus equity. Which equity do we use? It's the ending capital. And we get that from the statement of owner's equity. So let's work on the assets section first. Well, before we can do that, we need to do the 3-line heading. So the 3-line heading, the first line, of course, is always the company name, then the name of the statement that you're working on, the balance sheet. Now, the third line is always date related. So a balance sheet obviously has balances of accounts. So if we're going to show balances of accounts, do we show balances over a certain period of time, or can we only show balances as of a single day? You can only show balances as of a single day. And what day are we creating this balance sheet? We're creating it on March 31st. So remember, a balance sheet is kind of like a snapshot in time, a photograph of the company's financial statements. So we're going to use March 31st. Now we get to work on the asset section. Now, many of you may have noticed that this homework problem provides these links. It says review the ending balance of the accounts from requirement 1, which is a nice way to show you the ending balances of all your accounts so that you don't have to scroll up and down. However, notice this is the answer to the first part of the problem. So if this problem is on a test, they are not going to provide this link for you. So on the test, you would have to scroll up to find the asset account. So that's what we're going to do here. We're going to simulate a testing environment. So our asset accounts are right here. So we need cash, AR, accounts receivable, office supplies, and computer. So I will plug those labels in. So we've got cash, accounts receivable, office supplies, and that expensive computer. So scroll back up. We're going to get our account balances. So we have $72,310 of cash. We have $16,200 of AR, and then office supplies is $350. And then I remember that computer was massively expensive, $5,500. So now what we're going to do is we're going to total up the assets. So we're going to add these four numbers. So we've got 72,310 plus 16,200 plus $350 of office supplies, then that $5,500 computer gives us total assets of $94,360. And of course, if I click here in this cell and then hit this arrow, it shoots the number over so I don't accidentally mistype it. Now, the next part of our accounting equation, which is what the balance sheet is based on, is liabilities, then ending capital. Notice they have the labels here already, liabilities, and then equity, which is our capital account. So let's work on liabilities. We need to scroll up to find liabilities. We've only got one liability account. It's AP. So we scroll down here, get the balance of AP. It's at $5,500 that we owe for the computer. Accounts payable, and that's our only liability. So we're going to leave this row blank. Now we need our ending capital, which will be our equity account. So where do we get the ending capital from? Follow the arrow backwards. We get it from the end of our owner's equity statement of owner's equity. So scrolling up here, here is our statement of owner's equity. Here is our ending capital, meaning ending of the time period. In this case, end of March. So I'm going to copy the 88,860. That is our capital. Petrillo capital as of March 31st. And now here's where students hope and pray that liabilities, 5,500 plus this ending capital is the same as our total assets. It has to be, right? Otherwise, we've done something wrong. So $5,500 plus 88,860 gives us 94,360, which is the same as our total assets. So the label we're going to use is liabilities and owner's equity. So that's it for our balance sheet. See if I did everything right. Woohoo!
So again, the balance sheet shows how much the company owns. In this case, the company owns $94,360 of assets. And of that $94,360, others own $5,500 of it, and the rest, $88,860, is owned by the owner, Petrillo. So they do not have a lot of debt for the amount of assets they have. Good job.